But first, our top story right now, and that is markets. Futures down again this morning after a wild ride for the market yesterday. The Dow, the S&P 500, and the Nasdaq finishing mixed. A sharp turnaround after the Wall Street Journal reported that the Federal Reserve may take a wait-and-see approach when it comes to future interest rate increases. This is the U.S. is ramping up its efforts to curb the Chinese tech industry with the arrest of Huawei's chief financial officer, Sabrina Meng. Meng is expected to appear in court later today for her bail hearing. Here now is Vision 4 Fund Distributors Vice President Heather Zumarraga joining us to talk more about that. And Heather, it's good to see you. Thanks for being here. Your thoughts on markets and whether or not we're going to see this nervousness continue, even though now we've got a little more clarity on where the Fed might be going.
Yeah, sure. Absolutely. I think the markets will continue to be volatile, but it was just such an amazing move to bounce off the lows of 780-point decline on the Dow yesterday. And the markets were telling us maybe it's not about trade and the arrest of Huawei CFO, that maybe it's all still about the Fed, because after we got the report from the Wall Street Journal, the wait-and-see approach, that's when the markets really came off the lows. So that's telling me it may still be about the Fed.
And now this brings us to the jobs numbers today, because the Fed is saying we're data dependent. They're going to raise rates in December, by the way, but after that, our moves are going to depend on how the economy does. If we get a gangbuster number today, then maybe the Fed says game on, we keep raising interest rates. Yeah. But if the number's a little on the soft side, then that confirms the economy is starting to see some headwinds.
Well, if it's on the soft side, I think markets will fall out of bed again, because the fact is, look, the Fed might be out of the way based on what came out yesterday as a wait-and-see approach. So the better the data in terms of wage growth and unemployment, give me over 200,000 number. That's what I want to see. Well, I think that'll be okay for the market.
I think for the market, it's a right down the middle number that it's looking for.
So 200,000.
It's
around
150, 200,000, but if it's a gangbuster number, then the market's going to have to start pricing in the Fed keeps going.
Yeah, they're going to have to price in the fact that, well, look, the economy is running strong, and maybe the Fed is going to have to be real vigilant. But Dagan, let's not forget that the Fed has this enormous balance sheet right now, and another form of tightening is unwinding that balance sheet. Remember earlier this week we heard buzzing about Steven Mnuchin, the Treasury Secretary, bringing up this issue to bankers, saying, would you rather see the Fed unwind that $4 trillion balance sheet, or would you rather see interest rate hikes? Because they're both forms of tightening.
They are, and you're actually starting to see the results. We've been saying all year that you don't know how this will play out in terms of the balance sheet reduction. You don't know what the knock-on effects are through the economy and even the markets, because this is an unprecedented unwinding of an unprecedented building of the balance sheet. So what you were seeing yesterday is diminished liquidity. It's making it harder to buy and sell stocks, bonds, and even oil futures. That you have some exchange-traded bond funds that the price of these exchange-traded funds is actually trading below the net asset value, which in a regular ETF you do not see. And so a lot of people are blaming the liquidity problems you're seeing in the market on the balance sheet reduction, which is $50 billion per month. The balance sheet now below $4 trillion.
I just want to say something about the balance sheet reduction. The Fed is pretty committed to continuing that.
It's got to.
But because it's continuing that, that's another reason for this wait-and-see approach that they're looking toward.
That's why I brought it up, because it's another form of tightening. And so,
but because that tightening is going on, they're saying, well, maybe we don't need to be so aggressive on interest rates, because that's also going on.
And by the way, I think that's what Steven Mnuchin was trying to sort of allude to. I mean, he was saying, look, you've already got this going on. Maybe you want to recheck that in terms of the rate increases. Let's get to trade, because it's another issue. The assistant to the president for trade and manufacturing policy, Peter Navarro, was on Fox Business last night. He weighed in on this Huawei arrest.
Neither the president nor Ambassador Bolton were aware of the Justice Department action prior to the dinner. We were not informed of that by the Justice Department, and there's nothing wrong with that. Justice Department does these things independently on its own, and that's what happened.
And then, of course, overnight, we get that tweet from the president of China guy basically saying all the teams are working and we're sure we're going to get a deal in the next 90 days. Donald Trump tweets back saying, I agree. We'll see.
Yeah, and there are a lot of people in this town and up in New York who are hanging on every word, but a very dramatic development. I actually tend to believe that the very top officials at the White House didn't know this was coming, but there has been pressure from this administration overall on the issue of Chinese malfeasance. perhaps the largest component of which has been IP theft. And this is a high-profile arrest.
It's high-profile also because of the espionage factor. You know, the Journal reported in the piece yesterday, John, that this is a company, along with ZTE, that has been looked at for a long time in terms of the Chinese government using these companies as tools to spy on foreigners, including Americans.
You know, there's so many factors here. There's the espionage factor. There's the sanctions factor. You know, allegedly they were involved in evading Iran sanctions. And then there's just the competition factor. The Chinese are doing everything they can to build up in high-tech industries, and they're challenging America's strong, most important industry.
They want to be number one.
Trifecta. By the way, that's a trifecta right there. If you want to justify this arrest, you just went through all three big reasons to really lower the boom.
Well, you have to remember, we had a trade truce at the time or right after this happened, meaning that China already knew, I think, that this arrest happened in Canada, went back after the G20 summit, and then said that there was some form of trade truce after this happened. And Huawei has been investigated for a very long time, so it shouldn't be a surprise.
What I'm saying.
What this tells me is the idea of some grand reset of American-Chinese economic relations seems a little excessively hopeful to me. You know, there are some very deep-seated disagreements here, deep-seated rivalries that I don't think are going to go away in 90 days.
But maybe it's time that the U.S. started enforcing our laws and standing up for American corporations that have been robbed by the government of China. That is, as the Wall Street Journal editorial today points out, trade negotiations and enforcing our laws, those aren't incompatible, and everybody can prosper as long as we all get on the same page.
Which is why many people from both sides of the aisle agree that President Trump was right to poke and push China and demand change. Real quick, Heather, are you going to put new money to work in this market, or are you still afraid you want to be on the sidelines because of the volatility? Where do you stand?
I think you have to stay the course right now. The markets will remain volatile, but I think we'll get a positive day today given the trade disputes this morning.
Heather Zumarraga, good to see you this morning, as always.